So I'm going to be talking about how to set up an ABCD trade. And I did look at this morning, and let me pull out this chart here. This is the ES chart, MES chart. Both will work. Let me make it big here. Okay, so with an ABCD pattern, what you got to do is you got to make sure that your downdrafts or your pullbacks are deep enough, right? Because what happens is this is based on harmonics, okay, and the market moves in zigzag formations, okay, all the time. These patterns repeat themselves over and over and over again. And so there's W patterns, okay, Z patterns, and they follow trends by the fact that you get, in this case, you get a low here and then a higher low here, okay? And this sets up for an ABCD pattern. So this is where when Ike says, oh, okay, on the 1 minute, this is starting to set up as an ABCD pattern. That's what he's looking for, right? You're looking for trends that you can get fulfillment on these harmonic patterns, and that document that's out there, goes into this process in infinitum, okay? And there's actually studies on TOS that you can actually use them, and it finds the pattern, and you see it, and you see it in terms of triangles, okay? Because this is basically a harmonic pattern right here, okay? And this is exactly what I'm talking about. And what happened this morning, it was just a perfect setup, and I'm going to show you how to use the fibs in this case, okay? So in this case here, this pattern went to here, okay? And that's exactly what happened. And so, okay, so let's take this off, and then I'm going to use now the extensions, the Fib extensions that TOS has built in, right? And so when I looked at this morning, I noticed that there was these two drops, all right? And so what you want to do, you want to make sure that the drop is enough to merit a pattern, a zigzag pattern, because if it's too shallow, then what happens is there's not enough buyers that come in to support the ABC up pattern, okay, or ABC down pattern if you're shorting. They work in both ways. So the first thing I do is I take a retracement, all right, and then I want to make sure that this is enough. By sight I can tell that it is, right? So when we go down in this to this area here, you want to make sure that the retracement goes down into at least the 618 area, but the further down the better, right? So this one went down to the 23.6 area, and the key to this pattern, right, is that once you put this in place, and this is not the extension pattern, this is the retracement pattern, okay? So once you put this in place, if the market moves down below this starting point here, it's an invalid pattern, okay? You have to start all over again, right? And that's typically where you want to put your stop in this area here, okay? All right, so that's the retracement, and that's where you start out with, right? Now I'm going to take away the retracement, and I'm going to put in the extension. So here's the extension pattern, and I have this set up on my charts, right? You can usually they're at the bottom, they're at the bottom of the chart where you get your drawings, right? But you can set it up to where you have your drawings here, and then they go across all of your charts in toss. All right, so let's open up the Fibonacci extension. All right, and so you're starting from the low here, okay, and you're going to the highest point, you know, because you haven't. So keep in mind, you have not seen the high here, right? We have not seen the high. All we've seen is this pattern here, and it could be here, could be here, right? But it happened to be here. So you go to the highest point where the market was, and that's your B pattern. So this is A down here, B here, C here, okay? And and now what you have here is a market now where you have a nice zigzag pattern, right? And what I was looking for is the 125. So those charts that I shared with you this morning, I was in that trade, right? I was in that trade this morning, and I got into it. I can't remember. It was around here, this area down here. Now, typically, traders like to wait for this 618 extension to trigger the trade, right? So until it gets to the 618, that's where you put your position. Now, for me, because I'm a swing trader and I put in very small positions, and sometimes I add to them at times when the market goes down, okay? I don't necessarily wait for that trigger. And traders want to wait for that momentum, right, before they get in. But the way that I trade is just longer, much smaller positions, but I take much bigger gains, and I wait for them. I wait patiently for them. All right. And this morning it just happened to work very quickly. And so, yeah, Lance, the stop is here. Okay. For this particular pattern. Right. And this morning I gave it additional room. I just like to give it additional room because I just don't care, because the positions are so small. They can go against me, and I can just wait. I can just wait it out, and the market's generally going up, and that's why I mostly trade longs. All right. Okay. So now you can see the distinct pattern. So let's look at it. So here, that's AB. B to C, and now the distance from C to D is the 100 level, right? 100%. But generally, these patterns extend themselves. They extend out to 125, and sometimes they go up to 161. And probably today is a day that'll probably go up to the 161 level, right? Because if you look at it, the market is not going to pass 3,700, right? We just don't have enough strength for the market to pass, but it could go up to 3,680. Very, very typical that it goes up to 3,680, hangs around there before it goes through a century mark, right? So those are kind of natural resistance levels that the market has. And so this Z pattern here, what I expected it to go at least here, and you can see here, if it goes to C, right? If it goes to this area here, this distance here, from here to here, and from here to here is the same. It's exactly the same, okay? And that's what makes the pattern a pattern. Because the market generally moves down in the same distance, or less distance, right? In a market that's trendy, and then moves up to the position that it's equal to from AB, and then equal to CD. And so, because the market was we had some good news, the market had some momentum, so I decided to take it to the 125 level, and we actually passed it, and I got out of the trade. So I had 3 contracts on at that time, and I got out of the trade. I let it pull back, and then I added on the pullback. I just added 1 contract, and I'm going to let it run. Now you can see here, this forms a level of resistance, right? This because all traders many traders are trading ABCD positions, all right? And so it tends to stop around this area, and you're gonna have resistance, and it's just the perfect time to get out, okay? And then let the market do what it does, and then a new ABC, a new ABC extension may form. Okay, and so I can take this out here, right? Completely take this out, and you can see here that from here it's actually starting to form. Now we need this market to go down, right? We need it to go down here, around to this area, for it to be a valid setup for ABC, ABCD. Okay. And it doesn't necessarily have to be wicks, Lance. It could be, because the market has gone up here. There are buyers up here that bought in this area. So this is a market. The market is going to take this out. It's going to take this high out, whether it's today or tomorrow or whatever. There are buyers up here that that have bought and are sitting there waiting, right? And so so eventually this is going to be taken out, and that's why in a market that's trending strong in one direction, you have confidence that you're going to get that. You just need to have the patience. So that's really the ABCD pattern. I did the same thing on MNQ. Okay, MNQ was even stronger. So let me pull this one out. Okay, just to really show you here. But you also have these kinds of things with MNQ. MNQ is very, very volatile. Okay, and so you really have to have really, really wide spreads or wide stops on these, or else you'll get taken out every time. They just take you out. Okay, so this morning, today was Tuesday, right? So what I did was I started from this area here. Okay. And this is actually the 4 hour. So let me take this back to 1 hour. Okay, let's take this back to 1 hour. Okay. All right. Okay, so you can start here, but remember, this is too shallow, right? And yes, it's strong now, but you wanna go to a place that that you can achieve the profit target. Okay, so let's go through this here. So I'm gonna start with the extension this time, because I can see just by looking at it, this is enough down move for me to qualify this particular starting point. So I start here, and where's the high here? The high here at this point is here, okay? And the low is here. All right. Now I was shooting for the 125 area, and if you remember my charts that I put on, I had that arrow right here at the 125 area, where it was 124.46, and that's basically my profit target. I hit that, I got out, and then I haven't put a runner because I want to get a pullback to put a runner in, like I did with us the ES side. Yeah, you want to retrace down to at least at least the so if we put a retrace here, so let's put up, so we have it here, right? So if you go from here down, right, you're gonna want to retrace to the 50, ideally it's the 23.6 area, and you can see here it's the 23.6. See, right here. So it did move down. Now it cannot take out this because it invalidates the pattern, and you might have an ABC going down at that point, right? So so it gets confusing when you put in all these levels here. Okay. Oh. Okay. And so this is A, B, C, and here's your D area. See, now in this case, it went up to the 161, as I was mentioning, all right? And so so again, these patterns just repeat over and over and over and over again, okay? And then when you're looking at Ike's charts, he's basically using the same patterns, in different directions. And so he's saying, okay, we moved up now. Now it makes sense for the market to move down, right? It's going to grab the buyers and then eventually move back up again, right? Or if we're in a downtrend, vice versa. So that's it. It's pretty straightforward. Yeah, there was an ABC there of sort. But again, I just, when the market goes down, I like to catch those downswings, and I just put on a position and just let it ride. And eventually, it gives me a profit. It turns into a profit. To the 125 level. Yeah. Usually it's safe to get to the 100 level, to get out at the 100 level. But with a strong market, typically it'll hit the 125 as well. All right, but it's up to you. You might want to stagger your trades too. You might want to put on a couple contracts, get out at the 100 level, set your stop to break even, right, and then possibly let it ride, or it could go back down, but you still have a profit. So hopefully this was helpful to you guys. I'm going to put the recording in the training channel, and again, if you have any questions, just let me know. All right, thanks, guys. Awesome.